Hey guys, welcome back to another video. You're watching Unlimited Options Investing. In this video, we're going to be talking about primarily the Nasdaq. The big tech names are making a big comeback. Bitcoin, Ethereum, crypto, oil, all the fun stuff that's happening in the market. Is it going to last, or is it just a hot flash in the pan and then we're going to continue going downward? This episode's going to be a good one. So starting off with our heat map of the S&P 500, we're seeing a lot of green around the big tech names. So we see Apple, Microsoft, Google, Amazon, Tesla, Facebook, Meta Platforms, Match Group, Twitter, software companies like Salesforce.com, ServiceNow, financials having a good day with JPM, Bank of America, Wells Fargo. The more defensive names not doing all that well. Healthcare, energy. Looking at the top right, Starbucks is having a good day. This one is one I've actually been eyeing for quite a while. I think it went as low as $79, I believe, at the 52-week low. Whereas we saw 52-week highs of about 130 or so from my memory, as well as Nike reporting earnings yesterday, and that one jumping up after hours into today. And at coinmarketcap.com, looking at the major cryptos, so Bitcoin up almost 9% over the past week, with Ethereum up almost double at 16%. So we're seeing some positive momentum, not too shocking, as the Nasdaq and risk on has been doing pretty well over the past, let's say, week or so since Fed Chairman Jerome Powell spoke at the FOMC meeting, confirming the interest rate hike of 0.25% at this current meeting. And even though yesterday he scared the markets, saying that 0.5% isn't off the table, it did lead to a pretty healthy comeback midday on Monday, as we'll see momentarily. Other names like XRP up 10% over the past week, Cardano having a good week up 20%, Solana up 13.34%, Dogecoin up 10%, Shiba Inu up almost 10% as well. Shiba Inu up almost 10%, Polygon 10%, and Kronos up almost 10%. So a good week for crypto, but I specifically want to take a look at the candlestick chart. So this one is the Nasdaq, the QQQ, on the 2-hour time frame. So this was Monday over here when Fed Chairman Jerome Powell spoke and spooked the market a little bit. We see the pullback, we see the one step back, but followed up with strength with 1, 2, 3 steps forward. Now, would it be healthy if we did the same thing? It would be, as long as we're bouncing off and finding strength and maintaining this current uptrend. We also noticed the 20 and the 50 EMA crossing paths, where we haven't really seen that since the beginning of the downtrend at the beginning of the year. But this is only the 2-hour time frame. If we do zoom out and look at the 4-hour time frame as an example, we see that the moving averages haven't yet crossed yet, and more so the more you zoom out the 1 day, we see the green and the red lines even further apart. And while we're on the daily time frame, if we actually look at yesterday's candle, this one over here, this red doji candle, and oftentimes what a doji candle will mean is that there's indecision in the market. We went up, we went down, but we open and close around the same levels. Meaning, depending what we do after the doji candle, we'll kind of confirm whether we're going to continue going up or if we're going to pull back more toward the downside. So far today, we're going up. We open and we're currently still above the 50 EMA on the daily, to which I now ask the question, where are we going to find the next overhead resistance? So when are we eventually going to find that resistance and pull back even harder? Is it going to come right now at 355? Is it going to happen at 360, 372? When will the sellers eventually step up? As over the last week we just had green after green after green. Don't get me wrong, I'm not complaining, but at the same time, we don't want to see an unhealthy market. We want to see, again, 2 steps up, 1 step back, to continue making higher lows and higher highs. But if you've been in this market for any period of time, you know that the markets can be very, very irrational. The famous saying that markets can be irrational longer than you can be solvent. We can see on this chart the S&P 500 midterm elections year, seasonal pattern since 1946. Usually January, February, March, like this year, and midterm election year, have been pretty down, with April being a pretty strong month into a very strong sell-off into May, June, July, and then kind of going sideways until the end of October, where we see a rally into the end of the year. Now this is just a chart, it's just a statistic, is a statistic, is a statistic. They are potential indicators for what may happen based on what has already happened. Past performance does not magically tell us what is going to happen in the future. We don't have a crystal ball, unfortunately, but using data in the past can help you make a better decision, perhaps moving forward. So essentially sell in May and go away. Obviously not, you don't want to sell at 100%, but again, something to consider with your trades and your investments. So what does this mean for our charts? What we could see is a pretty violent rally into May, and then perhaps even see even lower lows as we continue into the middle and the end of the year. I mean, who knows? This is just a potential scenario. Anything can happen until then. Not to mention, if you haven't already, follow my Instagram, my Twitter, everything is linked below into my description. As well as if you're new to this channel, welcome aboard and hit that subscribe button, hit that like button if you haven't already. It helps the channel a lot and for me to grow the community even larger. Alright, and next up, let's take a look at the S&P 500. I actually want to draw another trend line, let's say since the downtrend at the beginning of January, and we'll draw it along the lines of such. So we see the breaking of that trend last week. Again, similar to the Nasdaq, as the big tech names make up such a big portion of both indices. And very similar idea, the doji candle being above the 50 EMA in this case and actually being green, whereas yesterday it was a doji candle that was red on the Nasdaq. So, I mean, very similar, again, a little bit different, of course. Then today we're seeing that continuation of continued strength, similar to the Nasdaq. However, if we saw a lot of red in the big tech names into Apple, Microsoft, Google, Amazon, I think I'm missing one, but Facebook maybe, whatever, Nvidia, if they were red and we were going down, there would have been a potential that we would have had a red candle like such and then continuing toward the downside until eventually the buyers would step in, maybe at this 20 EMA or wherever it may have happened, but that's not the case, obviously. Looking at the 2-year yield, and this one has been on a phenomenal run ever since 2021, around maybe, let's say, September, when we were sitting at 0.22%, and since then, finding strength on either the 20 or the 50 EMA, and climbing up to where we are now at 2.172%, just climbing day after day after day, similar to the 10-year yield as well. This one not shooting up straight up like the 2-year, but again, we're seeing a lot of strength, especially since the beginning of 2022. Again, the big thing we're looking for over here is an inversion of the 2-year and the 10-year. So far, we are hanging on with the 10-year about 20 basis points above the 2-year, but again, a little bit too close for comfort. I think it was as low as about 15 basis points maybe a few weeks ago. Again, the larger that gap is, the healthier this economy is. So right now, things are a little bit iffy. But for the time being, this could be an indicator that the economy is sick. We're just going to have to see how it all unfolds. When we look at the FANG index, again, very similar situation, day after day after day of increased strength, finding that low on about March 14th and then having 1, 2, 3, 4 days of strength in a row, yesterday's doji candle and today's continued strength toward the upside. And similar to the Nasdaq and the S&P 500, we could also be drawing a pretty nice trend line that aligns very nicely with 20 EMA on the daily. Taking a look at Bitcoin on the charts, this one's still in no man's land. We're still respecting that uptrend since the end of January, grinding up a little bit higher, but again, until we break that $46,000 mark, we aren't going anywhere. This one being the lead indicator if crypto is going to continue moving up. And everything I just said about Bitcoin, you could probably say the exact same thing with Ethereum, even though this one has been outperforming over the past week or so. But until we break this $3,300 mark or so, again, nothing too crazy to get excited about, but the lead indicator for me is going to be Bitcoin until it breaks that 46K. The rest of crypto, in my opinion, isn't going to go anywhere. We're a little bit stuck in no man's land, so we can't really tell if we want to continue this move high or if we're going to chop sideways for a bit until we make a decision of testing these previous highs or of this recent low at about $96. Taking a look at Tesla, this one has been looking pretty strong, breaking that resistance of about $900. Right now, just below $950, and Tesla is the kind of stock we can look at in $50 increments. So $900, $950, the next stop $1,000. After that, $1,050, $1,100, and so on. But so far, so good, finding strength above the 20 and the 50 EMA on the daily, opening and closing above both of them. Likewise, Amazon.com looking very strong as well. This one I can see having problems around the $3,400 mark, more or less. We'd be crushing that neckline, and continued strength wouldn't be out of the realm of possibility. But similar to a lot of tech names, we have 1, 2, 3, 4, 5, 6 green days in a row. It's likely that this one is going to want to pull back, a little bit of profit taking, maybe around the moving averages, and hopefully find strength around that and continue moving higher. Something maybe along the lines of this. And Google, like a lot of other risk-on plays, are looking strong. Again, we can all see these charts are looking pretty similar. Again, similar to the indices, we've had strength, the doji candle above the moving averages, and today's strength as well. Microsoft, again, very similar situation, strength, doji candle above the moving averages. Nvidia, similar, this one actually much more above the moving averages, right on overhead resistance at around 270. If we break that, the next stop is going to be $300. And lastly, taking a look at Apple, and unlike a bunch of other stocks we just looked at, this one didn't have a doji candle, this one being the biggest stock in the market, making up such a big portion of the indices, and this one not actually having a doji candle and is ripping on higher. So that's pretty much it, guys. The markets are looking pretty strong. Let me know in the comments below. Do you think this rally is going to continue? Are we going to continue having a healthy rally? 2 steps up, 1 step back, 3 steps up, 2 steps back. What's going to happen? Let me know your ideas below. If you haven't already, subscribe to the channel, like the video, follow my Instagram, my Twitter, my TikTok, and I will see you guys in the next video.